Three. All right, good morning, everyone. Let's get going here. So let me get this centered for you guys real quick. Okay. All right. Huge day on Friday. Very, very important day in terms of what's happened in markets and what we saw out of the U.S. markets on Friday. You can see there we really took a beating in all the indexes, most notably the Nasdaq and the Russell 2000. We had the Nasdaq, which was down 2.7% on the day. Steepest sell-off in ages. The S&P, which was down over 1%, and the Dow, which is down around 1%. Same sort of thing. We've been talking about this for a couple weeks. Is that the momentum stocks, the stocks that have been the market leaders, most notably the tech shares, have been on the offer, and the market's still kind of been holding up. And very often you see those kind of divergences that can only last for so long in markets. Friday, I think, was a bit of a turning point where we really saw collapse in some of those technology shares, and really saw the Nasdaq sort of fail on support. So, I think it's more of a coincidence than anything that it came on the back of Friday's non-farm payroll numbers, which, to be quite honest, a bit of a non-event. It's more or less in line. I mean, it wasn't like a huge beat or huge miss. We had average hourly earnings that fell below expectations. There could possibly be some of what sell-off about, but I don't think so. The unemployment rate remained unchanged. The market did expect it to fall, so maybe a touch soft on the jobs number, but I don't think that's what the sell-off was about. But there's a lot of different things that you can look at here. If you have a look at a lot of people calling bubble talk. If you look here at the PE ratios of the 10 largest S&P 500 components versus the 10 largest back in 2000, you can see there that we're literally lower. Every single one of them is lower than every single one of them were in 2000. So from a market point of view, I don't think that you can really classify us in the same bubble. I think that some of the social media and biotech stocks, you might be able to say that. But in terms of the general large caps out of the S&P, I don't think they're as lofty levels. You can see there the reaction that we had on the non-farm number. I think this is a really interesting chart. This is actually the worst. It's the worst reaction that we've had out of a non-farm payroll number for 2 years now. And like I said, I think a lot of that's coincidence, but nonetheless, I think it's something to take note of and watch closely over the next few sessions. All right, if we look at overnight and Asian action, we can see that the Nikkei was hit. I think right now it's down about 1.7%. The Hang Seng showing down about 0.6%. We've got Sydney down 0.2%, and the rest of the market's also down there. We did have China and Thailand that are closed on the day today. And really, we're being led lower again by the tech shares in Tokyo, which are really putting on the sell-off. The interesting thing is they're not nearly as heavy as the tech stocks were in the States. So the follow-through in Asia wasn't all that significant. We're going to have to see what we get out of Europe to really see if we can have a real continued catalyst there. But today is without question going to be a huge day. We got a lot of stocks that are ex-div today. And we've got Standard Bank at $3. We got Exaro at 3.15. We've got Sunlam at 2 Rand. We've got Sasol at 8 Rand, and we've got Remgro at 1 Rand 56. So there's some big divvies coming out of the market today. Don't get caught up in that. Maybe jot those down for the open. Just make sure you don't screw that up this morning. All right. If we look at the market data that's coming out today, we had Japanese leading economic index and coincident index indicators out, I think, a little bit earlier. We've got South African gross reserves and net reserves numbers. We've got the German industrial production numbers that are out as well. We've also got for the European region, we've got the investor confidence numbers. We've got consumer credit change in the States later, and then overnight again we've got trade balance and current account balance in Japan later this evening. All right, let's get into the maps. Okay, the first thing that I wanted to show is really what I think maybe even was really quietly taken simply because of the carnage that you saw in the NASDAQ, and that's a key reversal that we saw in the S&P. This is my favorite, technical indicator. You can see here, for you guys that don't know what a key reversal is, you've got the sort of end of a trend, which we've clearly been in an uptrend, as you can see there on the S&P. We make a new high to that trend, which you can see from the wick. We did make a new high on the day, a new all-time high for the S&P and a new high of this trend. And then we reversed and closed below the previous day's low, which we comfortably did. So we made a key reversal in the S&P, and really we dropped support from on a closing basis here. I think we dropped support in terms of where we really broke out from. So to me, very important what we're seeing right now out of the S&P. You can see the same sort of thing in the NASDAQ in terms of, same sort of thing. You can see that we had a total bloodletting, and we also dropped support where I think the recent lows were. But what's interesting here is we already kind of have a bit of a downward sloping trend line going in the NASDAQ, and that's what I'm talking about when I say that the market leaders have been selling off for quite a while. They've been underperforming, and we've had this separating effect on the between the tech shares and some of your larger industrials. And I think the reason why that's so important is simply because it's obviously not going to last for very long. So the fact that the NASDAQ did break down again, and I'm going to show you what's the most important out of all this. We're going to actually jump back into a 2-year and look here on the NASDAQ. Let me just get this looking a little bit. I'll shorten it up a touch so we can take some of that out of there and we can look at the chart a little more cleanly. We've been in an upward sloping channel, and quite a steep channel actually, for you can see they're going back over a year now, because you can draw these lines. I mean, we would have remained in these channels going all the way back to, let's see, we actually hit something, going all the way back to probably January or even December, November of last year. And what's really important, if we back out of this a little bit, is to just note how long that move up is in the NASDAQ. When we're talking about a 30+% move to the upside, and anytime you see sort of a steep rising channel like that, when you do break support, you really get sort of a rubber band effect on the sell-off typically, and the corrections can be quite vicious. So just keep that in mind. I think what we saw on the NASDAQ on Friday is probably could be the start of a big change, seed change in the markets going forward, and something that we really have to pay attention to. All right, if we want to delve into some of the individual numbers there in the States, you can have a look at stocks like Facebook, which you can see they're clearly dropping support here at 59 Rand. You can look at stocks like Twitter that are almost all the way down at the IPO, the price IPO a lot lower, but the first day of listing. You can see stocks like Priceline, which also dropping major support levels. Across the board here, you can see stocks in this index, Tesla, all of what have been excuse me, what have been major leaders in the index are really putting in huge red candles and down days. Netflix, another one. I don't know why the chart just did that. Yeah, as you can see there, just all of them just dropping support and really probably starting to flush out some of these tech funds. There's a lot of rumors at the moment that some of the guys at the end of last month had 6-7% down months to finish with just 3 or 4 days of heavy selling in the Nasdaq. You get this continuation. These guys are going to start to get flushed out and can create quite a avalanche effect. Right. We're getting into some of the local stuff here. There's only one real true, I would say, tech and momentum stock here on the local market, and that is Naspers, which you can obviously see has been on a hell of a tear, making a big correction here. I want to zoom forward a little bit so we can see this a little bit more closely. It's been incredibly whippy of late and very very dangerous to play. What I think is important in terms of closing levels, we've been kind of stuck in this range of 1150. We've got the one little outlier there, but 1150 and sort of 1230. I know that we talked about this several times over the past few days, but you can see there we really dropped that. We made a new closing low, and I think obviously we'll drop 1100 this morning. 10 cent was down 4.5%, or at the moment in Hong Kong is down 4.5%. So we're going to expect this thing to open up lower. What we really want to look for here is support, and I would say that the first real solid level of support was that major breakout that's below 1,000 rand. You can see there that's all the way down at about 960, call it. You can try to peg some levels a little bit higher, but I think there's a very good chance we test $1,000, but probably lower. I'll be looking for about 960 pull back to support, which is where we had. Look, I mean, this is running between September all the way out to December when we broke out of consolidation in as little as a 60 rand range. So we had a hell of a lot of consolidation to break out there. That is real solid support in my mind at 960. So watch it closely in the next few sessions. I don't see any reason why we can't get down there if the leadership like that continues out of the U.S. All right. The next one we'll have a look at is MTN. MTN's dropped a little bit of support on the trend line in terms of on Friday's action. You can see there really support, I think, coming in around 215 and kind of potentially looking like it's made a little bit of a double top. So I'm trying to find some stuff this morning that I was digging quite hard looking for some stuff to show that could possibly have some weakness, considering our futures are opening up down around 400 points. And we know that the risks that we saw on Friday in the U.S. market. So, but the charts at the moment are still looking incredibly bullish. I'll show you one more local that is starting to look a little bit tired, a little bit heavy, and that's really Grindrod, which you can see here about 2480. Sorry, there's some sort of support here for Grindrod around 2480. I think once you get below that, we could see a real sell-off, and probably could take us all the way down to $20. So just watch that level closely. It's just one that's showing some sort of weakness. There's not very many left. Mediclinic is one that's actually, sorry, I tucked the wrong thing there. That's been trading incredibly well. Bullish potential here if we can break out above Friday's levels. We pushed up and we closed at 76, which is basically right on trend resistance. If we can push up north of 76 and get a nice close above 76, I think that this thing has a reasonably significantly higher target. I'm kind of showing this one this morning because it is more of a defensive and probably won't be as adversely affected as the others. But you can see there the target on this stock probably going to be looking almost $10 to the upside, maybe more around 85 Rand if we get a breakout here on Mediclinic. And that's it for today, guys. Thanks a lot.
Thanks, Boy.